Hi, welcome to this month's investor update. I'm Nicole Hoare, Business Development Manager here at Century 21 Novocastrian, and Ben Robinson from Flick Group joins me today.
Hey Nick, how you going?
Good. Here we are back again for our monthly finance update.
On the back of an RBA decision.
I know, what a week, right? So I think all mortgage holders, plus everyone in the industry, was holding out on Tuesday for that announcement to come out.
Yeah, you're dead right. So there was a bit of mixed opinion heading in. Money markets were quite neutral, so they weren't really sure if rates were going to go up or stay on hold. The announcement was made to keep the cash rate at 4.35%, so at the same level it is at the moment. What that means though, it's sort of more related to the commentary that came from the RBA. So inflation is higher than what they want. It's not returning to the target of 2 to 3% at the rate they want it. So yeah, the commentary says that they will go higher if they need to. They're closely monitoring all the factors. There's been quite a lot of wage growth. That is slowing, but when you've got wage growth go up but GDP go down, you're essentially paying people more to produce less. So over the last 2 years, it's been a supply and demand issue. There's been wait times and lead times on a lot of goods. Too fewer goods with excess demand chasing those goods causes inflation. With high inflation for a long period of time, it doesn't bode well for the consumer, with the cost of everything going up. A lot of cases outpacing wage growth as well. So at the moment, cash rates on hold. The RBA have said they're going to closely monitor all of the aspects of inflation. The inflation inputs that are having the most weight at the moment are fuel prices, rental growth, professional services, cost growth as well. So going to be interesting to see how the next few months play out.
Yeah, out in the media, it's the first aspect that a lot of people capture first rather than dig in a little bit deeper. But what's the rate predictions? Like, there's a bit of a mixed...
It's a bit of a mixed bag at the moment. There are a few economists relating where our cash rate is versus New Zealand and the US. So you need to take that with a grain of salt. We are our own sovereignty. We are closely tied to both of those economies. So there are economists saying that we might get another 2 or 3.25 rate increases, taking the cash rate to around 5% or in the low fives. However, still, to this day, there are a couple of the big banks in Australia that are predicting rate cuts early 2025. I don't think that might necessarily happen. I think that would be a little bit of false hope, assuming that we're going to get rate cuts early next year. But if we can predict that the cash rate's going to remain the same or might slightly increase if inflation doesn't come down quick enough, I think that's the safest place to put your money at the moment, because CPI inflation is predicted to increase off the back of the last data from 3.6 to 3.8 for the June quarter. So I think all will be revealed with where inflation goes in the next 3 months to what the RBA are going to have to do, because they've openly said that they're going to do whatever they need to bring inflation back down into that 2 to 3% range in 2025. And the only tool they've got to do it is the cash rate affecting mortgage holders.
Yeah. So I suppose following on from that, there is some positive things out there in the market.
Talk about some positive
stuff. Let's talk about some positives. So let's talk about some refinancing policies and, how you're here to be able to benefit and help investors or anyone with a mortgage to be able to put some more money back in their pocket.
Definitely. And I think just on the back of what we've just spoken about with the data that's come out, the household consumption has reduced. So rates have definitely had an impact on people's disposable incomes, income less expenses, how much is left at the end of the day. Mortgage is one of the biggest costs for most households. If you've got multiple properties, that is compounded. So there are a lot of lenders that are constantly changing policies and implementing new initiatives to try and help out existing mortgage holders. So people that are paying their mortgages on time, that could save by changing lenders. I've had a number of clients recently that have been put in touch, might not have looked at things in the last 12 to 18 months, and we've been able to save them on average, I would say over 1%, which is massive, especially if you've got multiple properties, multiple loans, the compounding effect of that. And what that will mean is if you're feeling the pinch at the moment and we're able to save you 1% or something material like that, and we were to get any more rate rises, 0.25, 0.5%, you're still going to be better off. For investors, understanding the use of interest-only loans when they're holding a portfolio of debt and how that factors in to tax implications, cash flow implications and whatnot. So very, very important to keep on top of your mortgage and assess your options.
Yeah, it's definitely worth reviewing with you, Ben. Thank you so much for joining us for this month's Investor Update.
Pleasure.
We'll be back with you next month to bring more light to...
Yeah, well, it's interesting. I think we do these on a monthly basis, and it's quite interesting the amount of stuff that can change behind the scenes, the stuff that's not in the media, lenders issuing new policies or reviewing terms and stuff like that, which, you know, just in the last week, there's a lender that's come out and, for instance, now will lend 95% to people with a university degree, no lender's mortgage insurance. There's all sorts of other things going on in the background that you wouldn't even be able to understand even going direct to a bank, because a lot of these are, you know, second tier lenders that are only accessible through the broker channel. Very exciting times.
It is. Thank you so much, Nicole Hoare, Business Development Manager here with Century 21, and we'll be back with you next month.
Thanks, guys.
Bye.